Okay, everyone, we are about to go ahead and get started. Thank you for joining me this afternoon. Let's go ahead and get started.
More than 5 billion people around the world continue to struggle with money and financial illiteracy.
It's Madison Avenue manipulation, right? It's been going on for years and we buy into it.
How bad is financial illiteracy?
It's not taught in school, so people don't know this naturally.
Oh, you're right.
So you grow up not knowing anything about it. You make a lot of mistakes along the way, and we're hoping to educate them and teach them how money really works so they can learn the cause and effect of all this.
And it doesn't have to be generational.
Exactly.
No.
Exactly right.
Break that cycle.
Once you understand the basics of financial literacy, it changes your life. The secret is financial literacy. I mean, teaching your kids how money works.
I think it's really understanding how money works.
Once they understand the basics of how money works, they shouldn't have to struggle for very long.
Steve Siebold and Tom Matthews are the authors of How Money Works. Stop being a sucker.
Money means possibility. It means opportunity. It means freedom. Things you've always wanted to do, dreams that you have. Money makes it possible.
You know, of all the interviews we've had in the last 6 weeks, I'm actually most encouraged by that one.
So welcome again. It is so great to have you here with me this afternoon. For those of you who do not know me, my name is Shantae Moore, and I will be your financial educator for the next half hour. I would like to welcome you to the How Money Works Elements educational series taught today on Zoom. This course is based on the groundbreaking book, How Money Works, Stop Being a Sucker, which now has over 500,000 copies in print. And How Money Works is the first financial education book that anyone at any age can enjoy and benefit from, literally from age 10 all the way to age 100. And speaking of the number 100, the book has now been featured on over 100 prominent TV shows, including CNBC, CBS, ABC, and Fox. The How Money Works book has received a rare endorsement from the Heartland Institute of Financial Education, and it has been reviewed and referenced all over the web, including the popular online financial publication Make It by CNBC. So you can also follow How Money Works on Instagram for practical tips and helpful resources at How Money Works Official. And if you have not received a copy of this book, just let me know once we finish, and I'll make sure to get you a complimentary copy. I'll put it out in the mail for you as soon as possible. So our class today is titled Short Term. It is the fourth of 5 elements. And once you complete all 5 elements, you'll be eligible for a certificate of completion that'll be signed by the authors of the book and by me. This element is all about what to do right now to get your financial house in order so that you can enjoy more peace and confidence in the present, and so you can start positioning yourself to build wealth for the future. So let's go ahead and get into it. So we're picking back up with the 7 money milestones, starting with milestone number 3, which is creating your emergency fund. I always tell folks, I always recommend that you at least save 3 to 6 months of your annual income to prepare for any unexpected expenses like unforeseen medical bills, home appliance repairs, or replacements. And then any hassles like major car fixes. And don't forget the costliest of all, which is what if you lose your job and have to experience unemployment? So if you are living paycheck to paycheck, like many people are today, your emergency fund could be the insulation that separates you from financial disaster if something were to happen. So you can check out these sample annual incomes and how much you'll need to fit our 3 to 6 months income guideline. I always tell folks, look, there are 2 rules of an emergency fund. Rule number 1 is that your emergency fund is only for unexpected emergencies. That's it, that's all. It's not for gifts, not for getaways or buy one, get one sales. And it doesn't matter if it sits in your checking or savings or some type of separate account, as long as it's somewhere where you're not tempted to use it for anything but an actual real emergency. And rule number 2 is that if you need to use your emergency fund, let's say to fix a car, replace the fridge, or to pay for braces, don't hesitate to use this money. That's what it's for. Just make sure that afterwards you add back a little money every month until your emergency fund is full again. And once you've worked with your financial professional to square away your proper protection and emergency fund, it's time to talk about managing your debt, which is milestone number 4. And really, before you can enjoy any type of financial security or financial independence, you really have to look at your spending habits and try to reduce them or eventually eliminate them as much as possible. We want to eliminate all of our debt. And I really hate to say this, but in our culture, debt is a crisis that's perpetuated by a society of suckers led astray by the instant gratification desires of their generation. That's a mouthful, but it's really true. There's no shame in admitting that you struggle with debt. As it is one of the most common threats to having a sound financial future, and you're not alone. But it's something that we have to face, and it's best faced head on with the support of your financial professional. The average American today has $28,900 in personal debt, and that's not including mortgages, and many really have much, much more than that. And don't forget that over half of Americans suffer from some kind of anxiety relating to debt. So just imagine that when debt is removed, that we can truly and enjoy life more fully and more freely. So obviously things have been really hard with all that's going on right now, especially with this pandemic continuing to linger on. So here are 5 tips to eliminate and stay out of debt. The first is know what you owe. I can't tell you how many people who just ignore the amount of debt that they have. It's like a big, bright pink elephant that's in the middle of the room, and they just continue to ignore it and walk around it. To really start tackling your debt, you have to know how much you owe. The next tip is to stop making late payments. You really want to pay these things on time, even if it's just the minimum amount. And when you really want to start tackling your debt, you really want to go after one debt at a time, whether that's choosing something with the highest balance or the highest interest rate. We'll talk about that in a little bit. Just choose one debt at a time to attack. Next tip is to stop charging and cancel any unused subscriptions. So stop using your cards, cut them up. And then lastly, if you have a mortgage and you're a homeowner, it might be an option, a good option to consider refinancing your mortgage, especially with the low interest rates that we are currently dealing with in our environment right now. So I want to dig into each little tip again, starting with know what you owe. So I always suggest make a list of any and all of your credit cards, any debts, any loans. It is tedious, and I'm sure it sounds that way. But trust me, you will feel so much better when you have your arms around these numbers and the information. So for each debt, write down your numbers and dates. Write down your outstanding balance, the monthly payment that you should be making, just the minimum monthly payment that's required, the interest rate, and then also you want to indicate the monthly due date. Then once a year, you can pull your credit research, you can pull your credit report from one of these free online services and make sure it's just accurate and up to date. By law, every American has the right to a free credit report every 12 months. Just go to annualcreditreport.com to get yours. And check all the websites of the top credit reporting agencies for pointers to improve your score and to report errors. You want to look for the word dispute to see how you can dispute incorrect information. So go to transunion.com, Experian.com, or Equifax.com. So the next tip was no more late payments. Again, every time that you pay after the due date, it does dramatically hurt your credit score. And in addition to that, you can accrue late fees. A good credit score really can open opportunities to get lower interest rates on loans like mortgages, loans for your car. So these things do matter. There are two tips to paying on time. You should set up automatic payments, or you should consider setting alarms on your cell phone, whatever it takes to make sure that you are never late. And if you have balances on multiple credit cards, so I was kind of talking about this in a couple of slides ago, again, pay down the total balance one card at a time. You typically, there's two ways that you could do it. You could pay off the smallest balance first or the highest interest rate first, whichever you choose. Whichever card you choose, you should pay more than the minimum payment and as much as possible within your budget extra. So in this example here, you could start with card number one, which has the lowest balance by far, even though it has a higher interest rate than card number three. Then you could zero out card number two, which has a similar balance to card three, but a significant higher interest rate. This is why writing down the information about each of your debts was such an important step, because that will help you make strategic decisions that will help you build momentum as you steadily eliminate each debt at one at a time. And as you pay off each debt, you're freeing up income. But you don't want to spend that extra money. You don't want to go out eating or buying new shoes. You can use it to create debt elimination momentum by adding that money that you were paying on all your previous cards to your payment on that third card, on that card number three. This will increase the speed at which you're paying off debt. And hopefully you're getting excited because you're paying off these little debts one at a time. So basically, you just keep repeating this process until your credit card is debt free. Your goal is to have zero balances. But remember, even though you paid it off, you do not want to close those credit card accounts. That's a really big mistake a lot of folks don't know that they're making. And the reason being is because it's generally better to keep those paid off accounts open from a credit score standpoint. You want to show lenders that you can responsibly manage credit without maxing your credit cards, but that you also can pay them off every single month. So, what happens is that many people, they stop charging things and stay out of credit card debt by putting their cards in a safe place, keeping it, keep it out your wallet. It's not hard to use when it's there. Another way to stay out of credit card debt is to use check cards like your debit card or mobile pay, where that money pulls directly from the balance of your checking account. Also consider canceling digital subscriptions. I think in the last year or so, people are mindlessly signing up for so many monthly subscriptions like online video streaming services, cookbooks, these things that you probably don't use on a regular basis, or that you really don't use as much. You can cancel those subscriptions and put that money towards your debt payments. And one way to lower your monthly mortgage payment, again, is if you're a homeowner, is to consider refinancing, which again, that could also help you free up a lot of cash to accelerate your debt payoff. So by paying on time, correcting credit report errors, and reducing debt, your credit score should improve. And in time, you may qualify for a more favorable interest rate or a different type of loan on your home. So increasing your cash flow is milestone number 5. And while the suckers gripe about how tight things are, the wealthy, they're always trying to figure out how to free up more of their cash flow. And this means seeking out ways to earn additional income and better managing your expenses. So let's look into this a little bit further and how you can do that. So if you ever heard cash is king, it is, because cash flow is the money that you have available to spend or to save. And after you establish proper protection, you've established your emergency fund, and you focused on having a solid debt management plan, now you're ready to zero in on how you can grow your income. because more income means that you can accelerate everything that you and your financial professional are working toward. So you might feel like George, he's plumb stuck with his budget and finances. But after learning about the many options and ideas that are out there, really almost everyone can find a way to get unstuck and create more cash flow. So let's look at ways to get you unstuck by finding your fire in the hole chili opportunities. So here are a few things you can do to increase your cash flow. First, create and stick to a budget. Again, look at your income versus your expenses and your needs versus your wants. And once you do that, then you want to develop a written game plan. Focus on where you can spend less and where you can earn more. Then reduce spending on expenses like car and homeowners insurance. One very simple tip is to choose a higher deductible on those auto and homeowners policies. If you have a higher deductible, that will actually lower your premiums. You can also reposition your savings. This is probably one of the biggest things that I talk to folks a lot about, because a lot of people are actually saving money. They're just saving it in low interest savings accounts. So I help them to reallocate those funds to accounts that offer higher interest or higher opportunities for that money to grow. And then another thing, again, if you're a homeowner, is to drop your private mortgage insurance, the PMI on your mortgage. That's if you qualify, because once your home reaches 20% of its equity, you can actually refinance your loan without PMI included. So always remember that your financial professional can help guide you through these ideas and more. So another thing I want to talk about is, well, how do we actually get more money? And there are 3 big moves to supercharge your cash flow. You can add a side gig, which allows you to earn additional income. And that's really always a quicker way to reach your financial goals than just trying to spend less. You just need to earn a little bit more. And a recent survey found that 45% of US workers have a side gig earning an average of $1,122 per month. So maybe it's time for you to look into getting a side gig, get in on the action. Or maybe start a business with low cost expenditures. There are a lot of low cost business opportunities out there. And as Steve Seabold says, find a problem people have and solve it. So consider becoming an entrepreneur part-time, where you could leverage time that's outside of your normal day job. And then as your income increases, there could be a moment where you could actually transition away from being an employee to being a full-time entrepreneur with even more control of your cash flow. So that's what I did. I was an employee first, and then I started a side business, a low-cost business. And then the third thing is, don't forget that you can always adjust your W2 allowances. And especially right now, like we're in the middle of tax season, and a lot of people are like, yeah, I got this big tax refund. And, if that's you, just consider this: by adjusting your W2 allowances, you'll actually get more of your cash in your paycheck all year long, instead of that money going to the IRS and the IRS returning it back to you in the form of a tax refund. But you always want to talk to your tax professional before making any changes. So really just think about, how impactful to your life and income can it be to start a business? Again, this is the route that I went, so I want to talk about it a little bit, because in terms of creating an income for retirement, you really just got to think about, how does it compare with growing your savings? We call this wealth equivalency, which it really just gives us a perspective and an argument for the importance of creating cash flow by becoming an entrepreneur. And here's how wealth equivalency works. Just think about it. How much would you have to place into some type of an account, an investment account or whatever, that earns a 5% annual return, to equal the earning power of owning a business? So if you just earn $1,000 per month in your own business, that means that actually equates to having $240,000 in a 5% interest-bearing account. So of course, where can you find 5% these days? First of all, I get that question all the time. I'll tell you right now, it's not in any type of average bank account. Bank accounts, those actually average 0.09%, so not even 1%, less than 1%. And in an average bank account, you would need $1.3 million to pay you the same as what a business that pays you $1,000 a month, that would pay you $1,000 per month receives today. So, I mean, compare your options. What is most likely to happen first? You keep doing what you're doing today, and you earn enough for long enough to save 240,000 to $1.3 million, or you learn a new business that helps you create $1,000 monthly income. And that's really one of the best examples I've seen of how money really works. So, what if you build your business income up to $5,000 per month? That is the equivalent of saving $1.2 million in a 5% interest bearing account to still generate that same $5,000 as of income that you get from your business. So you see how that really just changes the math. I'm a numbers person, so it's like $5,000 from a business, or I save $1.2 million. And that's why we tell people all the time, that's why you can't become a successful a successful business owner, long term, without having these basics, the things that I'm teaching you about of knowledge, which are what I'm showing you now. So think about it. As you have this business and it continues to grow, it becomes even more obvious that most people could never save enough to come anywhere close to the earning power of building a business. And this is the principle that I really want you to focus on as you consider exploring the future. You could work with me as a How Money Works educator, because in addition to teaching people how money works, we teach people how entrepreneurship works, so that they can really apply this knowledge to building a business that earns far beyond the amount that their savings could earn. Knowledge is power, and especially applied knowledge is a power when it comes to your money and your income. So as we wrap up here, I just got a few slides to go through. Our mission is to teach 20 million families how money works within the next decade. So we're going to do that. We're going to stamp out financial illiteracy in every single community. And that's a huge undertaking. And that's where we need a lot of people to help us. We need thousands of How Money Works educators. And I just want you to know that we're always looking for people to help us teach these exact classes. And that's where you or somebody that you know could actually come in. So as we wrap up, we're at the end of today's element. I just want you to think about which concept resonated with you the most, because that's why we started on this mission of eradicating financial illiteracy. This is how you start to take control of your finances. So on the screen here, you see a worksheet. We call it the Money Discovery Worksheet. And part of attending this course is that I can help you if you don't have a financial professional yet. Because as I mentioned throughout the presentation, a lot of this stuff, you want some professional guidance to help you accomplish these goals. And we help folks do this because it's just like driving a car. You need 2 points of reference, which is where you are and where you want to go. And the same comes with your finances. So the How Money Works Money Discovery, it's actually in the book. It's at the back of the book. If you complete this worksheet, it can actually help you figure out where you are financially and look at where you want to go in the future. So if you don't have the book, or if you would actually like a PDF copy of the How Money Works Discovery, just let me know and I can email that to you. So again, please make sure you discuss these concepts and review the milestones with a financial professional, especially if you don't currently have one to turn to. The first of the 7 money milestones is financial education. So hopefully you have read or will read the How Money Works book, but that you're already starting down the path of learning how money really works. And, I can, again, help you walk through those other 6 milestones. And I just want to share with you how I do that. So if you don't have a professional, this is a little bit about how I help folks that I work with. So I help you go through all 6 money milestones, and I do that in 2 steps. So the first is we schedule what I call a discovery phone call. That's where we spend about 15 to 30 minutes, really just identifying where you are now in your financial life, and most importantly, where you want to go. Then me and my team will spend a few days crunching numbers, searching for the financial industry for the best products and services to meet your needs. And then also identifying the ones that best fit your current situation, your future goals, and your budget. Because we always want to make sure that whatever savings strategy or plan and accounts or whatever that I recommend, that you can afford it, that it fits within your budget. So finally, once I have all that information, we'll do a Zoom meeting just like what we're on right now, where I will share my screen and then I'll walk you through the steps that I recommend to help you achieve all of your financial goals. So I encourage you, don't procrastinate. You really want to start building your financial foundation by putting your money to work today. So if you've liked what you learned today and you would like more information, again, you can follow How Money Works on Instagram at How Money Works Official for more practical tips and helpful resources. If you would like to connect with me to schedule that discovery phone call, there'll be a link in the description attached to this video. I'd be happy to have a conversation to see how it could be a resource to you. So until next time, I will be talking to you all soon. Bye now.